Today, Bitcoin sinks back to the $40,000 level. Terraform Labs files for bankruptcy protection in the U.S., and Sui Chung of CF Benchmarks discusses the importance of the recently launched spot Bitcoin ETFs for the industry. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Bitcoin is back in the red this morning, still getting hit by the post-ETF selling pressure. As of noon Eastern, it fell back below $41,000. Ether also diving to kick off the week. It's down more than 4% and back at the $2,300 level. Litecoin, meanwhile, also falling roughly 4% to $68. Okay, let's talk about the top stories. Terraform Labs, the company that sparked 2022's crypto meltdown, has filed for Chapter 11 bankruptcy protection in Delaware. According to the Sunday court filing, Terraform Labs has somewhere between $100 million to $500 million in assets and liabilities. Now, the company said it wouldn't need any additional funding to meet its financial obligations as it moves through the bankruptcy process, and that the bankruptcy filing would allow TFL to continue to execute on its business plan while legal proceedings in the U.S. move forward. Now, those legal proceedings, of course, include Do Kwon, who's slated for extradition to the U.S. and set to face criminal and civil charges. Next, a German businessman has been accused of defrauding investors in a $150 million crypto marketing scheme. Now, prosecutors said that going as far back as 2017, Horst Jicke aggressively promoted USI Tech as a crypto mining and trading platform for retail investors. Jicke himself purported to be the founder and CEO. In reality, prosecutors allege that he and two co-conspirators lured and defrauded investors in a multi-level marketing scheme. Jicke was arrested after entering the U.S. for the first time in more than 5 years back in December. He was arraigned in federal court and faces 4 charges, including securities fraud and money laundering. All right, on to our main story. Crypto World's Jordan Smith spoke with Sui Chung, the CEO of CF Benchmarks, a subsidiary of Kraken. Many of the spot Bitcoin ETFs that just launched in the U.S. use CF Benchmarks to track the price of Bitcoin. So we spoke to him about the launch of those investment products and what they mean for the company.
Thank you so much for being here. It's been a little over a week since the ETFs started trading. It's currently Friday when we're speaking. They're, of course, moving lower along with the sell-off in Bitcoin. As we're talking, it's pushing right below $42,000, that support level it's seen for a while. Can I first just get your reaction to the selling pressure we've seen for Bitcoin in the wake of these ETFs? Is this just the sell the news type of situation, or is there something more going on here?
Yeah, good question, Jordan, and it's a real pleasure to be here. I think what you're seeing is a combination of some of the macro news has been a little bit disappointing. Prospective rate rise expectations and rate cut expectations have been severely tempered by some of the latest data we've seen. And we also have a structural issue within the crypto market specific to the ETFs, and that is Grayscale, the Grayscale Bitcoin Trust, which obviously converted into an ETF on January the 11th. Now, that vehicle is a long-standing vehicle, used to be closed-end, so you have a lot of investors in that who had previously not been able to divest of their shares at NAV or close to NAV. GBTC traded at a discount for many, many years. And now that that opportunity is there, many of them are taking that opportunity. So you have this sort of wave of redemptions of GBTC that is sort of outside of the normal cycles of Bitcoin, and you have a macro backdrop which is looking less helpful. I think those two things in combination we're seeing that filter through in the price action.
Yeah, and aside from the immediate sell-off that we've been seeing recently, I mean, this is still a major story for crypto in 2024. I just want to get your reaction, too, to the fact that these spot Bitcoin ETFs are trading in the U.S., something that has long been fought for. I mean, what's your reaction to the fact that we have these here in the U.S.?
Well, obviously, I'm delighted to see that investors, and at the end of the day, markets serve investors, and I'm delighted to see that US investors of all stripes, be they institutions or individuals, have a public market product, publicly traded, that is accessible to all of those investors, that can really revolutionize their portfolio allocation and the results of their investment portfolios. Because as you know, Jordan, Bitcoin has this unique property, this uniquely diversifying property for a liquid asset, has this unique diversifying property whereby just say a 2% allocation to Bitcoin will result in risk-adjusted returns improving by 20%. Risk-adjusted returns as measured by the Sharpe ratio. So, as a reminder to your viewers, risk-adjusted returns is how you measure for every unit of risk you take, what return can you expect? And the Sharpe ratio that Bitcoin delivers when combined with a traditional 60-40 portfolio is 20% better on just a 2% allocation. So the other metrics by which one measures the portfolio, such as drawdown risk, such as volatility, are really not hugely impacted because you're adding such a small allocation to Bitcoin.
There's been a lot of expectation from people on Wall Street that we could see somewhere between 20 to $50 billion in inflows for these ETFs by the end of the year. Do you feel as though we're on pace to meet some of those expectations? Do you expect that we could exceed them? What is the feel right now for these ETFs?
Yeah, expectations, they vary wildly. There have been many forecasts of likely inflows, some of them at very high levels, some of them at much lower levels. And I think that one is slightly missing the point with that. I mean, this is not a 1 year, 6-month process. This is a much longer, more drawn out process. And what we should be looking for is, to what degree do investors understand the proposition that investing in Bitcoin brings? What is that proposition? Do they find it interesting? Yes or not? And at what point might they find it interesting? Just like any other asset class, when it first enters the mainstream investment community, there's hundreds of different points of view, lots of different ways to look at it, and we need to ensure that investors have the information and have the relevant data to be able to make those informed choices. And if they have that, then I'm confident that long term the inflows will be very, very significant, because at the end of the day, when you are constructing an investment portfolio, you are trying to achieve liquid, risk-adjusted returns that mean that you have comfort with that the amount of risk you're taking, you're being adequately compensated for, regardless of the amount of risk that you're comfortable with. So that means having investors understand that if you're less comfortable with risk, you have a lower allocation to Bitcoin, not a zero allocation to Bitcoin.
I also want to mention that CF Benchmarks works alongside some of the asset managers that are running these ETFs. In fact, many of them are using your Bitcoin reference rate. And I want to know what, if anything, that these ETFs mean for your business, or is it just the rate of adoption on Wall Street in general? What does that mean for your business going forward?
Yeah, there's two impacts onto our business from the listing of these ETFs. Firstly, as you rightly point out, 6 of the newly listed ETFs are benchmarked to the CF Benchmarks Bitcoin reference rate New York variant. So we're very, very proud of that. And so obviously that has a direct revenue impact, as all of these ETFs will be paying license fees to CF Benchmarks for the use of our index. And that's a great benefit to CF Benchmarks. It's a great benefit to our parent company, Kraken. As you know, CF Benchmarks is a 100% owned subsidiary of Kraken. And then there's a second order of effect, which is it really opens up the vistas of opportunity for a business like our own, a business that is built around servicing regulated financial products with robust, high integrity benchmark pricing for cryptocurrencies and cryptocurrencies only. So we are a strange business in many ways in that we're crypto native. We solely benchmark the cryptocurrency asset class, but our products are squarely aimed at regulated financial providers. Providers like the CME Group, who's listed Bitcoin futures and options contracts, also settled to the Bitcoin reference rate, and to date have traded in excess of $2 trillion.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.